The Obama administration has scored its first trade victory over China. Steve joins us from Beijing with all the details, but I don't think that they're gloating in the light of the WTO ruling. Steve, this calls for a little bit of diplomacy. What's the latest?
Absolutely. This is also a ruling that came down in June, but was just revealed publicly today. WTO judges largely siding with the U.S. complaint that accused China of making U.S. companies sell copyright-protected magazines, CDs, and video games through state-approved businesses only. Now, the ruling also went against China's curbs on foreign producers of audiovisual goods that exempt domestic rivals.
This is an important decision. The United States won most of its key claims. China also won some aspects of the case. But the bottom line is that it's going to make it easier to import American films, DVDs, sound recordings, books and magazines into China. And it's going to make it easier for foreign companies to engage in the distribution of those products within China's internal market. So this is an important case.
But the ruling stopped short of a clear-cut U.S. victory. Judges agreed with the Chinese, who argued that its criminal law is strong enough to deter piracy. The U.S. argued that the thresholds, though, for criminal prosecutions for pirates are too high. China's trade surplus with the U.S. surged to a record $268 billion last year. Analysts say improvements in China's IPR protection may help U.S. companies more than any changes in its currency policies. U.S. Trade Representative Ron Kirk says the ruling is, quote, an important step towards ensuring market access for legitimate U.S. products. Bernie, like to hear what Kirby has to think about this. Back over to you.
Yeah, absolutely. Thank goodness for the WTO, since we don't have a Doha round to speak of there. But any thoughts on this story at all? Could this be the beginning of more protectionist fortress-type barriers? Or do you think these are flashes in the pan and there are other issues that are more important? I think Obama's got his hands full at home, doesn't he, with healthcare reform and all that?
That has been one reason we haven't seen too much flack over trade that was expected from the rhetoric on the campaign and the rhetoric in the beginning, Geithner's approval process, et cetera, et cetera. However, we have midterm elections coming up in the U.S. We have unemployment that is continuing to be a major issue. We have voters who are very dissatisfied with potential health care. What is one area where politicians always will try to rally support, and that is Buy America, protect jobs at home. This is going to probably be an area where there is an increased amount of rhetoric, and let's just hope it's not damaging, because one thing the global economy cannot take is a return to trade wars and protectionism. We are already going to drop in global trade 10% or possibly more this year. And we haven't dropped in global trade for decades. It is.
What tells you that? What tells you that? We got homes being bought and, presumably people.
Global trade. So global trade has.
Now, why is it going to rot further, though? Why is it going to get worse than it already has? I mean,
no, it could get worse. Sorry, what I mean is it could get worse if the rhetoric heats up to the point where it begins to be damaging, and we do start to get protectionist measures put in place that cause more rifts, that cause more cases to be taken into the WTO, et cetera, et cetera. There are barriers that could go up. Defensive barriers and protectionist barriers coming up to the U.S. midterm elections. That's what I'm saying. Politicians right now in Congress will have very little to go back home to if right now the current rhetoric that we're seeing over health care, voters are very dissatisfied. And if you look at the income numbers, if you look at the jobs numbers, people are going to be very unhappy come next year. So again, what do politicians have to hang their hat on? They may decide they want to hang their hat on trying to keep jobs from going overseas. It's again and again and again what we see Charles Schumer, et cetera, try to do to stir up populism, and it could be very damaging.
This is no time to be playing the populist card, though, right?
And we haven't seen it happen. I'm just saying it's possible.
Here's one from Mike in Orlando, Florida. And of course, and actually, I'm kind of loath to put this one to you because it's right down your barrel. But he has a question tagged on at the end. Can you pull up the mic one? The U.S. economy is 2/3 dependent on consumer. Consumer's dead. Probably will be because of credit job losses. Do you feel that the S&P is now at fair value to overvalued? Where on the spectrum? We'll use that as representative of stock valuations pretty much across the global sphere.
Thanks, Mike, for asking, because I'm not an equity analyst, but I can tell you that intuitively and based on valuations and the ability in the coming economic environment for companies to derive revenues, to continue to drive earnings, and drive their stock prices higher, they're overvalued at this point. Stocks around the world broadly are overvalued. The S&P is overvalued in my view. I have said over and over we're going to revisit the lows. Maybe we will, maybe we won't. But I'll tell you this, if you're going to buy equities, the S&P at this level, and expect to have a great return of the buy and hold strategy, I firmly believe you will be extremely disappointed. And I'm not advising selling short at these levels, but I do believe it's overvalued. A long-winded answer to his question. I think we will see S&P in the 700s. Whether we go back to the evil 666, I'm not sure. There's a 30-40% chance in my view.
We were at 666
in March, and that's what everyone calls me on. You said we're going back to new lows. Maybe we will, maybe we won't. I know we're going to be far lower than this in two or three quarters.
You know, if the Fed's not going to move, where are they right now? 0, quarter point or something?
Well, the Fed fund rate is between 0 and a quarter point target. But what we really need to look at are their programs for buying treasuries.
They're going to end that, though. I mean, October is going to be it, and then what? They raise rates? I
have my crutch right here again, but there are two of the biggest hedges in the history of the world here. We think that they're done buying treasuries. Of course they're not. Of course they're going to have to monetize debt. They have two sentences here. I'll read them very quickly. In these circumstances, the Federal Reserve will employ all available tools to promote economic recovery and preserve price stability. They can do anything, all available tools. And they say that the Federal Reserve is monitoring the size and composition of the balance sheet and will make adjustments to its credit and liquidity programs as warranted. Those have been in the whole time. Those are the two biggest hedges in the world. They can extend all of these buying programs. That's what we have to watch. The target rate doesn't matter.